to Russia now. It says that it's ready to take the emergency step of buying its own ruble debt if a new wave of US sanctions threatens to upend the market. Bloomberg's Nejra Cehic joins us now from Moscow. Nejra, very good day to you. Good to see you. So, how prepared is the Finance Ministry for the worst-case scenario of sanctions?
You know what, Manus, when I put this question to the Deputy Finance Minister Vladimir Kolychev, I said on a scale of 0 to 10, with 10 being extremely prepared and very confident, how would you rate your preparedness? And he gave me a very clear 10. Look, what we're looking ahead to, though, is the possibility of the worst-case sanctions, which would be sanctions on new sovereign debt, but also sanctions that affect state banks. Now, in terms of the new sovereign debt, the fears about that have already pushed ruble bond yields higher, sent the ruble itself weaker as well. And we've seen foreign holdings of those ruble bonds decrease as well. I did ask if in a sort of extreme scenario you could see the central bank intervening to buy ruble bonds, and he said this would be a possibility. So that was one thing in terms of the ruble bonds. But then when I asked him as well what could be the fallout from any sanctions that affect state banks, he said there could be some significant collateral damage. Listen to how he answered.
In this environment, we are very likely to see the other partners, like US allies as well, like Europe, China, etc., willing to shift away from US dollar denomination of the international trade because of the vitalness of the exports Russia provides these countries. We are very likely to see this shift intensifying. And that just showcases that we are probably at the line of in terms of sanctions story, we are very likely at the line when further intensification is likely to ricochet to US interests, US allies' interests, etc., simply because Russia is a very big part of the global economy, and it's very hard to isolate it.
And look, in the event that there were sanctions on dollar transactions of Russian state banks, and Mr. Kolychev said, look, private banks could step in to help. And I did ask whether they were considering actually limiting capital flows. He said, with that at the moment, absolutely not.
Nejra, good morning. How concerned was he about ruble weakness? Tell us the latest thinking there in Moscow.
He was actually fairly sanguine about where the ruble is at the moment. He wouldn't kind of commit himself to any levels where it might go or where it should be. And I asked him how much of the weakness he actually thought was down to external factors, of course, sanctions, one of those, but also the general EM sell-off that we're seeing. And here's what he said.
First of all, you rightly said that it should be looked in the context of what happens in EM. And the ruble is not the worst performing. It's actually somewhere in the middle. And the fact that Russia has significant cushions in terms of its FX reserves, it should bring about confidence that any significant volatility on the FX market could be easily dealt with by the monetary and fiscal authorities.
If investors were just looking at Russia and Russian economic fundamentals and ignoring the EM sell-off elsewhere, where should the ruble be trading at?
As I was saying, the ruble is a floating currency, so I cannot talk about levels. But if we would think that the capital outflow that has happened over the last half year, because of the EM crisis, because of sanctions, risks, etc., would not have materialized, then ruble would be stronger by, I don't know, at least 5 to 10%.